Say that in 1 or 2 years' time, I will achieve something.
Oh, yes.
Well, I'm not going to say everything now. Not really in the sense that, it's just like any other organisation,
So 2.4 billion in terms of just the client in Singapore or Asian market?
No, the companies are companies. They bring in
So what is this savings spending? Will it be as you develop the KPIs and strategies as a consultative process?
It starts off with what is
I can just say that
I'm not sure
you can?
I think so.
Okay.
I read all the words, and I've got typos now, but listen. No, it's all right.
Who am I supposed to be speaking to?
But maybe we
Give me
can,
a second.
I'd like
I will, let's catch up after, yeah, or another time,
yes,
right?
or another time. Like, but I maybe think and as you are sometimes, quite a difficult lady.
Oh, come on, you've got me on, what do you mean?
No, I know. I do know you.
Okay. Let me find the girl one. Sorry,
You try. So everything becomes like
Very interesting. She reached out to me and asked we also found potential
Bro, I need you to connect the HDMI to my laptop.
Oh, I just see it. This is practically fun trials. See the different lights comes out.
Yes. Yeah. Please grab a seat and we'll get started. Welcome to the sixth and the last of the Grow Asian Digital Learning Series this year. It's been lots of fun. We've looked at so many different topics across this year, and I think really built a community here in Singapore and by webinar across the region of people who are passionate about bringing the power of digital solutions to smallholder farmers in ASEAN. And I hope we've built connections between founders, between agribusiness executives, and VC that will really drive the growth of the industry. Today's topic is obviously around finance, and it's an issue that's very dear to me. I think when we think about smallholder farmers, I think one of the most important things that we can do is reduce the cost of capital, so farmers have access to fertilizers, have access to crop protection products, mechanization, the things that really drive yields and drive reliability on farms. So it's a really important topic. We've got a great panel of presenters today from agribusiness, from a lender, from a technology solution provider. So a great mix of perspectives on this issue. And I'll pass over to Rob.
Thank you very much. So fantastic, thank you very much for joining us today, the sixth and final in this series for Digital Learning Series. My name is Rob Holden from Beanstalk, so I'm one of the program partners here along with Dan, co-delivering the program. So as Paul mentioned, we have a great lineup of speakers, and I would like to introduce them. Maybe you say with Matteo.
Sure.
So Matteo is from Maha. It's a microfinance company here in Myanmar in Southeast Asia. So thank you very much for making the effort. Faye, I think everyone knows. Everyone knows Faye. So Faye is head of cocoa and sustainability for Mars. We have Akash from Croppin, so Vice President for Europe and Asia. So small territory. Okay. And we have Haji. So everyone, I think, also has met Haji before for Rabobank, CEO for Singapore. So the format for today is starting out with 3 presentations from our guests. Then we are going to go into a long one-on-one interview series where actually the guests interview each other. So we'll actually prep them to actually make sure that they ask all of the really hard questions. And then from there we're going to go into a rapid-fire brainstorming session. So again, 20 minutes, and you'll be led. You actually have on your name tag a number, which is for the 3 groups, but I'll go through that in a minute. And then the final closing inter-drinks, Paul's going to give a wrap-up of the digital learning series and some takeaways. And I think also what's really, really important is how do we actually take the learnings from this series and the effort that's been put into that. How do we actually translate that into tangible outcomes? We go back to the business on Monday, agribusiness in particular, how do we actually drive that change into the market for smallholder farmers? So without further ado, I'd like to welcome Akash to the stage and give the presentation. Thank you. Welcome, Akash.
Hello everybody, thank you to the organizers for including us in what I think is sort of an ideal set of stakeholders to really solve the challenges that the agriculture industry is facing today. So Croppin is a B2B software as a service agriculture technology company that works with agriculture and food businesses to be able to help them take a much more data-driven approach in managing some of their key business risks. These can include supply chain or yield volatility, forecasting grower performance, dealing with climate change. And when we started our journey in 2010, we learned quite quickly that the agriculture industry is riddled with a series of multifaceted problems, and they're all interdependent on one another. And solving for one alone and solving for them in isolation would take us only to a certain extent. Which is why at Croppin we took a platform approach, and we determined that it was important to work with the entire agri-ecosystem and connect them to truly empower the farmer. We wanted to build a platform that didn't just, for example, solve for farmer productivity, but one that actually supported them throughout their life cycle. Whether it was backward linkages, which includes access to the right forms of insurance, finance, knowledge and inputs, but then also the forward linkages, which is access to markets, to certification, so that we could really help their livelihood as a whole and solve for the entire problem. So today, Croppin works across the spectrum. We work with agri-input companies, financial lending institutions, crop insurance providers, farming companies, seed producers, as well as government and advisories, because all these stakeholders have an important role to play in solving for the farmer. Now, how do we actually do this? Fundamentally, we combine 3 data sources. We combine field information or ground data. We combine it with weather information and remote sensing or satellite data, or also referred to as geodata. And it's a combination of these 3 data sets that helps us truly build an engine to support growers at every point in their life cycle. We have a suite of products that we built that which is why we call ourselves a full stack agtech organization. We start with a farm management solution, which enables agribusinesses to collect data on their growers, everything to do with the grower, his plot, and the crop, from sowing to harvest. We also have an agribusiness intelligence solution that layers this ground information with satellite data. So really looking at the historical information about a farmer, how that farmer has historically performed, but then also being able to get more predictive and prescriptive in terms of what their yield is likely to be. We have a pack house and traceability solution that can track a crop after it leaves the farm gate. So once it goes through multiple warehouse locations, transformational processes, such that you can have end-to-end traceability back to the farmer that grew it. We also have a CRM solution, which can enable sales of inputs to growers. And finally, a direct grower application by which organizations can engage one-on-one with growers and create that two-way communication channel. And that, of course, depends on the grower demographic. But with this suite of products, we've been able to now digitize 5.5 million acres of farmland and benefit 2.1 million farmers globally through the enterprises that we work with. We're now active in 46 countries, and we've covered more than 380 crops. So what does this data really tell us? It's a great set of metrics, but there's a few things that we paid attention to when developing the platform. As you can see by the countries and the crops that we are a crop and location agnostic platform, which means that we have an architecture that's really a series of blank spaces such that agribusinesses with their complex and diverse and variable supply chains can use this tech to configure it for their own requirements. And the other thing is, if you look at the number of acres and the number of farmers, you can see by those proportions that we are very good in the smallholder farmer. And that's purely because of our origins. We are an Indian organization, so the lens we took to building technology was always a smallholder lens, and all the problems that it came with. Lack of connectivity, lack of education and literacy when it comes to the growers, small plots, major climate risks, the fact that different growers grow different crops, one after the other, and yields are highly variable. So that's where we've gotten. For the focus on for today was really basically talking about how we link agtech and fintech and how our solution is absorbed by financial institutions to be able to solve for smallholders. So the three challenges that we identified in the smallholder world when it comes specifically to financing them are on the pre-dispersal as well as the post-dispersal side. On the pre-dispersal side, it's really around farmer profiling and the right type of client selection. Really determining which is an appropriate farmer to finance and which farmer carries the lowest risk. And on the post-dispersal side, it's really the high cost of monitoring and transactions because smallholders are located in far-flung areas that are very, very difficult to access and monitor on a regular basis. So how can we use technology to be able to lower those monitoring costs? And the third would be for better advisory and knowledge. So extension services to the growers, because if we can give the right advisory at the right time to a smallholder, that fundamentally makes the smallholder less risky. So we have a suite of mobile and web applications that organizations can consume, whether that's a bank that has loan officers on the ground, whether that's a cooperative or an FPO that has their team of extension agents, to collect data on individual growers, to be able to create this dashboard so that they can monitor their supply chain or their grower base in real time. This tells us information about the grower, such as how large his plot is, the degree to which it's been infected, what is the expected harvest for the grower. And it's a real-time ticker, so as problems get reported with regards to climate risks or pest and diseases, you can really see how the grower's performance is dynamically shifting through the season. But along with ground data, what we've done is layer each farmer and plot with remote sensing. What you're seeing here is a heat map in simple terms to be able to split up the plot into 10 by 10 square meters. So just to provide perspective, 1 acre has 4,000 square meters. And in the smallholder world, that means we can get 40 pixels on average per farmer to tell us. So it's really suited for that granularity. And it is basically showing us the areas of the plot with high growth, medium growth, and low growth. And we look at a multitude of data sources to be able to determine this, right? We look at optical images, we look at biomass, soil moisture, etc., to come up with this score. And the graph that you can see basically monitors that crop and that plot over time. So you can see this heat map changing through the season as it gets refreshed to show you how the crop and the plot is performing. And this kind of data is a very valuable input for financing organizations to be able to assess the dynamic risk of a particular farmer. On top of this, we would go back 3 years in history to be able to understand how this farmer has performed historically. And this set of ground data plus remote sensing becomes a valuable input for banks. It's not the only input, but it's one of the key inputs to determine the agriworthiness of the farmer and the eligibility for financing. In season, this helps them monitor the growth on a near real-time basis as well, which really reduces the transaction cost of sending people to individual plots to be able to record data in a timely manner. As you can see here, if we zoom out of that single visual, eventually Cropin can provide a dashboard of this nature that can really help financing institutions as well as stakeholders such as cooperatives or farming companies take a look at the total profile of the grower. So you can see the crop stage that the grower is at, the expected harvest date, what is the expected harvest quantity. So this not only provides basic information about the grower's profile, but also of the financial health for that grower this season. The other remote sensing element that we've included is to really help banks innovate their strategy and reach clients and really identify the hot pockets of opportunity that they might be missing out on. And that's through our region level analytics. Cropin has 0.2 trillion data sets over the last 8 years, wherein it has a very rich database to be able to identify crops and predict their health as well as their yield. Which means that at a region level, we can provide you with 3 inputs. The crops that are growing there, so we start with crop classification, the health of those crops as well as the yield. We can do this for major crops in most countries. And the advantage for that is it can really help banks determine which are the new areas of opportunity and expansion, wherein they can probably go, and they can be a lot more targeted in how they select their areas for expansion and innovate their portfolio such that it's more adapted for smallholder farmers. This is our global presence. As you can see, some of our marquee clients are really across the value chain. We have processors like Omnish, agri-input companies such as Bayer and BASF. We also have the World Bank and WWF, McLean, which is a mainstream food processing company. Our location agnostic approach is proven in the range of markets that we can work in. And because we started in the smallholder world, it only got simpler to be able to implement in other geographies. This is a bit of our mission statement, is to create 20 million happy farmers by 2022 and maximize the per acre value. Thank you.
Okay, fantastic.
Right. Good afternoon, good evening, everybody. My name is Mateo. I'm based in Yangon, Myanmar. I was here for microfinance conference for the last couple of days. Great to be here. I'm going to walk you briefly through what we do. Maha is a 6-year-old financial service provider. We are currently owned by OVA, Myanmar OVA Group, which is the largest agri-input group in Myanmar, serving over 3.5 million farming families. Myanmar OVA Group has been around for over 25 years. And our minority shareholder is IFC, the International Finance Corporation, with 13% stake. Myself, I've been in Myanmar for the last 6 years. Yep, time flies. I've been with Maha for the last almost 3 years. And I'm an economist by background, so please, I'm not an economist, so I'm still learning my way through. But I'm going to walk you through what we do at Maha, which is fascinating in my humble opinion. Well, the mission of Maha is to be a responsible financial service provider. But we are recognized, we want to also be recognized for our agri-focus, for our fintech approach, and for our rural approach. We work predominantly with farmers. And when I mean predominantly, I mean that 93% of our portfolio is dedicated to smallholder farmers in Myanmar. Currently, we have over 45,600 clients, of which 93% are smallholder farmers. Definition of smallholder farmers for Maha: farmers who own between 3 to 5 acres of land. Portfolio is 38 billion, almost $25 million. We operate across the country in 8 big macro regions, states as they call, or divisions. We offer 3 loan products: farmer loans, vendor, and MSME loans. Vendor MSME loans account for about 10% of our portfolio, a bit less, 7%. We also take compulsory savings from our clients. We cannot take voluntary savings. And before maybe I move on, let me clarify the definition of microfinance in Myanmar. Microfinance in Myanmar is defined as loans up to 10 million chats, about $8,000. No collateral. And there's an interest rate cap of 28% per year. When I joined MAPA, we were number 35 in the country. Thanks to various reasons I'm going to walk you through, now we are number 14 in the country. There are 189 microfinance financial institutions in Myanmar, just FYI. And when 2.5 years ago, we had less than 6,000 customers, and we had only $3 million portfolio. So we had an amazing growth over the last 2.5 years by keeping our portfolio quality excellent. Well, I guess this answers the massive growth we had over the last few years. The company received the license in March 2013. Our fiscal year ends every year in March. The first few years, MAPA had opened a lot of branches, expanded in many locations, and that's why we incurred in a lot of cost expenses, and we made a lot of losses. Our first profitable year was March 19. We are on track to close our fiscal year current with another profit. We've been profitable since June 2018. 3 products. Key flagship product are cash loans for farmers for input cultivation reasons. So whatever they need for their inputs, they can get it covered from MAPA. We also offer vendor and micro SME loans simply because the first product those are bullet loans, meaning that the farmers do not pay any principal, any interest for the first 6 months. They pay everything at maturity. The other 2 products have a P plus I, principal plus interest, on a bi-weekly basis for vendor and a monthly basis for MSMEs. So that helps us manage our cash flow. We are crop agnostic, although over 57–60% of our portfolio goes towards paddy farmers. And then we also lend to other 28 different crops: tomato, beans, garlic, corn, onion, cauliflower. I was discussing with Faye earlier on, predominantly short-term crops. There are 3 seasons in Myanmar. We cover all of them through a network of 32 branches. In a branch, typically, who do we have? We have a branch manager, we have loan officers, we have a transaction officer that looks after cash. We also have a regional house, and then we have our head office in Yangon. Now, since we have farmers and crops located in different locations, what we have learned at MAPA is that one size does not fit at all anybody, and farmers do have a variety of needs based on where they are located. Even farmers in the same big macro region in Myanmar have different needs depending on the crop. Starting of the season, end of the season, and you really need to match that. And that's why at MAPA we have a proprietary seasonal calendar that is discussed at audit and risk committee level on a regular basis, and we update that on a regular basis. In our core banking system, we have over 200 sub-loan type products developed so that we can offer tailor-made products to our customers. Myanmar farmers are obviously challenged because, number one, we don't have any crop insurance. The country is exposed to regular floods, heavy floods. Nargis cyclone back in 2006 was a disaster. High operating costs. There are a lot of brokers, middlemen squeezing the margins of farmers. Their cash flow is irregular. They usually have families to feed, kids to send to school. And you know what? Of the 189 microfinance financial institutions, only 2 MFIs are lending to farmers. One is MAPA, the other one is another company, a colleague of ours, Proximity, and the banks are obviously a bit overlooking the sector because they think it's risky. They think farmers are not going to repay. They think it's easier to do urban lending, the classical group lending. Well, we don't believe in that. We believe that if tonight you guys are going to eat, it's because of farmers, because of agri-companies, because of agri-businesses, and I think we need to really support the sector. There are 7 million smallholder farmers in Myanmar. Population size, 52 million, over 30% of the population unbanked. What else? 70% of the population employed by agriculture, and agriculture accounts for 29% of the country's GDP. Can you believe it? Those are our solutions. Bulletins, diversification across crops and regions, digital credit score and greenhouse model to assess the ability to repay of our farmers, and of course, a diversification of products in our core bank. Those are some of the statistics that I want you to really take a look and sink in, because percentage of GDP per agri contribution to GDP is massive. Poverty line is a great concern. The fact that we only serve 45,000 farmers versus 7 million doesn't make me sleep well at night. Obviously, we need to find a way to multiply our outreach and become an exponential organization, to use singularity terminology. Our process, well, what makes us unique? Well, first of all, we do 100% individual lending, no group lending. We are 100% rural. We want to think and act like a fintech. We're getting there, but we're still a bit traditional in some other ways. And Maha is made up of 3 components: data, people, and systems and processes. We try to use as little as possible paper, but of course we still have some contracts that we give out to farmers in paper. We get rid of them soon. We also use cash, and I think one of the questions that you'll probably ask later today is, how about those mobile wallets, mobile operators? Can we remove cash at all from our process? We're working on it, I'll be telling you more later. But I have a real-time monitoring. All our branches are live connected. We can check the portfolio at risk on any time of the day throughout our portfolio. We obviously have our loan officers going out to the field with tablets, applications, core banking, the basics. But we obviously want to do more. We're very hungry for more. We've been working with some experts over the last, I would say, 12 months, because before, let's say less than 6-7 months ago, if you're a farmer and you come to apply for a loan in Maha, it will take about 14 days to 1 month to get physically the cash in your hands. Because we have looked at, we have reduced the customer registration times, we have reduced some steps, we really nailed down, are those questions necessary for our KYC? Can we reduce the turnaround time? Now we can turn around the loan in 72 hours. To me, this is customer centricity. Maha, this is customer centricity. My team gets a lot of talk from me on customer centricity. Why? Because if we're not careful about customers, there is no Maha. There's no business, there are no salaries, there's nothing. We really need to be more customer centric. We want to really serve our farmers in Myanmar better. Regardless that we work in an emerging market with infrastructure challenges, we really need to have the customers here in our head every day when we wake up and when we go to sleep. Customer satisfaction is also important. We just released our first satisfaction service with some interesting statistics. But at the same time, we're doing this because we want to reduce our operating costs, because we work in rural areas, and delivering those micro loans to rural areas is costly. It's really costly, it takes time. But this should not come at the expense of a disengagement with the human being. I'm sure some of you are hearing a lot about high tech, low tech versus high touch, low touch. Well, we must find an optimal balance, and this is not easy, between fintech and humans, between a customer engagement, but still making sure that we keep an eye on our costs, on our outreach, on our efficiencies. Well, when I moved to Myanmar 6 years ago, my SIM card costed over $400 at a black market, at a market, informal shop. They gave me a paper, there was a photo of a Burmese guy, and he said, please pay $400, okay? I did, and I got a SIM card. Today, I'm sure for those of you who travel to Myanmar, you get a SIM card for less than $1. We have the cheapest cost of data in whole ASEAN. There are 4 telecom operators. There's a lot of competition. And in 2012, I did not have internet at home. Today, you have 4G everywhere. In 2012, you had very few people with phones, and now you have a smartphone penetration over 80%. I think the middle statistics is wrong. It should be over 114% SIM card penetration. And mobile subscription rate, 93%. Those are massive statistics, leapfrogging completely in the course of the last few years. Future. We want to remain rural. We want to remain agri. Our DNA is rural. OVA is a strong rural player in the country. We're looking for partnerships. We're looking for debt funding. We're looking for potentially equity partners. We want to diversify our product offering, because only by having a strong, robust product offering, diversified product offering, we can manage risk. Don't forget that over 100% of our loans are uncollateralized. We can't take any collateral. There's only a bit of peer pressure, community pressure, and of course, I could take these customers to court, but wish me luck. Operations. We are always trying to streamline operations. We obviously, our business, since we can't take deposits, it's very much based on leverage. We need a lot of funding on a regular basis every month from international sources, domestic sources. Rabobank is one of our latest lending. We actually got a loan 2 days ago together with Corday. Thank you. And but this it's a hungry baby for funding. You need to revolve those funds. Those microloans have 6 months duration. And above all, what we're trying to build is a team of passionate young Burmese, boys and girls. I think our gender ratio is 57% female, the rest being male. And we are building a corporate culture of meritocracy, of fun. Average age is mid-30s, end of late 20s, probably the oldest. But it's fun, it's the best job I've ever had. And I've been in the industry for so long, in microfinance, over 20 years. But I've always been in predominantly classic micro SME banking type of environments. And now being exposed to farmers and seeing the impact of those loans, I guess it makes my job a bit more meaningful. Thank you.
And last but certainly not least.
Hello everyone. Thank you for having me speak here today. I thought we'll start a little bit. So Mars is a family-owned business, and we've got 125,000 associates around the world, and we are predominantly an ag business. So a food and ag business, where we have food, chocolate as well, and food as well. So we're family-owned, and one of the purpose that we come with, in 1947, we have a very old document that was written by Forrest Mars Senior, which actually articulated that the reason business or Mars exists is actually for the mutuality of benefits of all and everyone in the stakeholders in our supply chain. And only just last year we launched what is the new Mars purpose, which is the world we want tomorrow starts with the way we do business today. So with this, we also launched Sustainable in a Generation in 2017 that looks at how Mars is going to build, it's going to work with thriving communities, healthy planet, as well as nutrition and well-being. In light of our Sustainable in a Generation commitments, we did a scientific mapping of where Mars, sort of our impact is around the world, and we realized that as a company, we are probably have the carbon footprint of a small country like Panama, and of which about 40 to 50% of our footprint is actually in cocoa. And if we think about where we need to be with the with the smallholders who grow a lot of the raw materials that we depend on as a company, we came up with what was Cocoa for Generations. We realized that whilst the world we want tomorrow starts with the world the way we do business today, the reality is a lot of what we're working in is actually generational, and that the change we're seeking to see will need commitment starting today, but we need to think about it in the long term. So there are two pillars within the Cocoa for Generations. one of which we call Responsible Cocoa Today. And that's where the topic of technology started to come in, because we need to, we want to make sure that all human rights are respected, particularly forced labor and child labor, and preserve forests. So we committed to not buying from farmers that have gone into, protected forests and things like that. So the need for us to actually map where all of our farmers are, their yield estimates, and understand the traceability all the way from the farm until it reaches into the processing gate. And of course, transparency. Transparency is important because we really have committed to income and increasing income for farmers. We've got to have a way of actually tracking that as well. So that's the responsible cocoa pillar. Now, where technology again comes and plays is the next level, which is sustainable cocoa tomorrow. So sustainable cocoa tomorrow has several other elements, right? One is what we call improved productivity, where and particularly in Indonesia and in Asia, that's more relevant, because if farmers are not productive, they leave cocoa, and we've seen Indonesia massively decline from 600,000 tons about 7-8 years ago till today it's less than 200,000 tons. And simply because cocoa does not compete at the current, old trees, older farmers, soil imbalance, and all sorts of other challenges as well. The other thing that also came about in our thinking is this over-reliance on cocoa as one crop is not going to sustain and make the farmer resilient. So looking at diversification of crops, and both off-farm as well as on-farm. And the third, of course, is the role of women and youth and children in the community, and how we could tap into all of these assets that exist in the community that can actually help us solve some of these challenges. So coming to Indonesia, I mentioned that in Asia, particularly, we are growing rapidly, so demand is increasing, but we're seeing farmers drop off rapidly in the last 6 to 8 years. And what I call it is the adoption challenge, right? Cocoa being an orphan crop, we do need to make sure that affordable and available inputs are available at the last mile. Quality planting material, the right soil fertility and management inputs, etc., and pest and disease management. But then that alone isn't enough. The biggest challenge we face is actually the knowledge and the knowledge transfer that needs to happen. And we all know farmers are, and back to your point, Matteo, is that it's one thing to say this is the right technology and that will triple your yields and your income, etc. But the reason why they would do something or not is really because they trust you. And that trust comes through human connections. Trust doesn't come through an app. Trust doesn't come through, just them seeing their neighbors do better on their farms. They need to have the capability and the competency to plan, how am I going to get there? And because, unfortunately, I work in a tree crop environment, which means typically financial solutions have to be over 7 to 8 years if you're replanting. And banks, as well as everyone, need to be a little bit patient. That planning process of how you teach farmers to plan, plot the farms and plan the right intervention, and then that plan then becomes something that we can coach and monitor against. But it's that coaching and monitoring that actually builds the trust, that gets you back in terms of, gets the repayment and the beans flowing back to us as the buyer. Talk about coaching. I think a lot of businesses have been talking about farmer training for a long, long time. And I came into this thinking, wow, we'll train thousands of farmers and magically adoption will happen. It didn't, right? And we only started to notice that it will happen when you have that connection and that coaching. And that you really, are able to see that difference. There is a big, generally, and I agree with all of my panelists here, that the banks are unwilling to lend. There is a mandate in Indonesia, for example, that there's this co-lending, which is a very highly subsidized at 7% rate of lending that is supposed to go to smallholders, but really, the bank's appetite for risk is very low. So as a result, we've had to look at a number of other solutions around how we can facilitate the smallholder access to financing. One of which is, against the farm development plan, we're now able to actually plan the execution and the phased approach of not giving cash but actually inputs. And the second one is, if the farmer follows all the plan and if the crop fails anyway because of weather, how can a crop insurance product or weather-based insurance product come in
that's more using satellite SMI, soil moisture index. So we've developed a product with IFC as well. So the other thing, and some of you may know Cocoa Trace or Cultiva, we have to think about how these loans get dispersed and the repayment comes through. Now remember, we're dealing with a tree crop that has this long sort of lag time between putting an input here and getting the results, in 9 months to a year. That's just for the short-term input, and assuming the farmers do everything right in between. If it's a replanting loan, it has to be 6, but at least 6 years with a 3-year grace period, right? So now we're going to start thinking about what are some of the, and you go through this lull where you don't get crop coming in because you're replanting, and so what are some other diversification options that come in that keeps farmers sort of, it makes up for the loss in income, but also it looks at some of the other things. So we use Cultiva or Cocoa Trace. Some of you may know that they were in some of the previous panels. And so this closed loop system of what we were talking about is, number one, let's put at the center the farmer, right? Farmers being the center of everything we do. How can we think about how we help them plan, a farm development plan, but these plans actually end up in an app that they are able to look at, follow, and do appropriate interventions as required. Then the second one is, as and when they get a loan, the inputs actually doesn't come in the form of cash, but rather through a network of cocoa doctors that we've built. Cocoa doctor is just an SME. They are cocoa farmers, but what they've done is they are a one-stop shop in the village that provides the planting material as well as the inputs. But in return for being customers, they also do the follow-up coaching and the follow-up sort of after-sales service. So these are independent entrepreneurs trained and set up by us, but then they operate independently. Now the idea is that as a loan gets dispersed, then the orders go to the cocoa doctors, who then not just sells you the planting material, but tells you how to actually put it in the ground and get it to perform well. And then on the product traceability side, we've set up networks of also collectors that collect these beans, and through that, how can we better facilitate the repayment of the loan through that. Of course, you need a platform to make it work. Now, this whole closed loop system to work, and we are looking at options together with Cultiva, with some of the local Indonesian banks. We really need to access the loans rather than, but they are very, very risk averse. And so I think the challenge, we can ask ourselves here as as microfinance institutions or other fintech, tech solutions is, how can we risk share? The reality is, for a company or one farm or just one party to take the entire risk, it's too much. But if we could chunk it up and provide risk sharing solutions, then hopefully, that might work. And that's a little bit about, that's my last slide. And I'm happy to take questions later.
Thank you so much for our 3 speakers. Great insights there from smallholders through to microfinance and also agribusiness corporates. And what I found encouraging was that even from an agribusiness corporate perspective, taking hold of and helping facilitate that microfinance thing. It's amazing. So now we come to we've got to put the heat on to the interview panel. So I'm going to welcome Arjun, who's going to interview. He's agreed to interview Akash. So please come up
I think we're going to sit up, isn't it? Or we're going to sit up. Thank you all for being here today, and I appreciate the invite to kind of drill Akash a little bit on his business. But for those of you who are not familiar with Rabobank, perhaps a quick introduction. We were founded more than 100 years ago by farmers, believe it or not, probably smallholder farmers at the time back in Holland. We have currently more than 100 billion outstanding to the food and ag industry worldwide. And the Rabobank Foundation is the arm that is looking particularly in smallholder financing, which we do in Africa, but also in India. And see what we can do in Southeast Asia as well going forward. So 39 countries active, more than 100 billion, so we're here to stay. Our mission statement is as well, growing better all together. So we clearly having the smallholder farmer in mind as well in that sense. So great to be able to be here and to kind of the next 10 minutes, I believe, or maybe longer or shorter. What I'm very interested about is, from a Rabobank, from a bank manager perspective, is what keeps me awake at night. You lend the money to the right person, who he or she says he is, KYC. Secondly, to get the money back. I mean, clearly the credit risk portfolio, credit risk. How do you define the credit scoring of the farmer? I mean, Robin is a data aggregator. The key question that I have is how do the bank use the data that you collect, and interested to find out how you do that and how we then use it in our credit scoring model.
Definitely. So Dropin actually provides a suite of applications that are tailor-made to the context of the person that is collecting the data and the organization that wants to consume this information. And we are able to provide a very structured approach in terms of recording the data sets that are important for banks to be able to make a decision for this. There's really two things here. When we actually provide farmer data, we use remote sensing to provide a historical perspective on how that farmer has performed. So we can go back 3 years in history and predict or tell you the crops that the farmer has grown, the number of seasons that the farmer has been active, and the yield or the performance of the grower. And if you can benchmark that with market prices, it gives banks a very good indication of the financial performance of that grower, which is important to determine the risk of the grower and a historical track record of that grower. Typically, this data is manually collected, the information is incomplete, oftentimes it's fabricated. So with remote sensing, this is pure ground truthing. That is in absence of any kind of human intervention.
Right, so the information from you.
So it actually depends on the crop. For perennial crops, the data would need to be refreshed less frequently. However, for annual or for seasonal crops, the data needs to be refreshed every 5 to 7 days. So apart from historical information, with this regular refreshing, you can also monitor the dynamic risk of the grower in season, which really helps to regulate the NPAs and timely collection and targeted intervention.
Okay, so if the bank receives that data, we put it in our risk modeling, we got our models, and then it assesses the risk of lending to the particular farmer in question. What is in it for the farmer itself, besides obviously they're having a better credit profile by having this historic data being built up over time? Can you elaborate a little bit in a from a farmer perspective where the benefits are? Because obviously we as a subscriber to the service are paying for it, the farmer doesn't pay.
Yes, correct. So the key benefit to the farmer is access to a tailored set of information at the right time. So Dropin, as a part of its products, also has a farmer communication module wherein agronomists that cooperatives or farm producer organizations or banks might be associated with can actually program a series of localized crop management programs, advisory and protocols to be able to tell the farmer from the time of sowing what might be the recommended practices specifically to their crop and their agroecology. So access to this timely information really helps the farmer be more productive, and a better informed farmer is a less risky farmer. But more importantly, we've converted weather into a product, which is especially important for smallholders in tropical environments. To give you an example, we have a rule-based weather engine where you can actually configure the upper and the lower limits of certain weather conditions, such as temperature, such as rainfall. And based on the 7-day weather forecast, if those rules are breached or those thresholds are breached, the farmer can get a preemptive message. Something as simple as it's going to rain in the next couple of days. You might want to postpone your input application. So it's a way for farmers to really consume this information in a simple manner through SMSs. And small things like that really helps them reduce their cost of production, and therefore their financial health improves.
And if you think about obviously microfinancing, it's also very important to have the scalability, your tooling or the service you provide can only be beneficial and keeping the cost low from a monitoring perspective if there's no scale. Is there no scale? Is the application used to the fullest extent, or will it be used to the fullest extent? Any comments on that?
At the moment, we recommend, so the model that has worked for us is really to work with farmer producer organizations and cooperatives that have organized several smallholder farmers into one particular group. We have actually a project from Government Foundation in India for mango and cashew farmers, and we work with an apex organization that actually manages 46 cooperatives and covers 25,000 farmers within it. So being able to access scale through these structures is the path to least resistance at the moment.
Okay, and a little bit more on the technology side. AI, machine learning, that's all part of the mix. Going forward, technology is clearly important development. What do you foresee as the next big thing in blockchain? There's a lot of hype talked about in the past. Is there anything that is part of your business model? Or?
Yeah, definitely. It's a conversation that we have every day, and for agri-businesses to really milk the use cases and the opportunities that blockchain can provide, they need to be ready for it. So they need to really go from 0 to 1, which is the basic digitization needs to be in place. That means data needs to be online, it needs to be structured, and it needs to be authentic. So as of today, Cropin plays a role in getting major agri-businesses ready for the blockchain. We're quite particular in how we look at blockchain and traceability. Oftentimes those terms are used interchangeably, and our suite of products really helps organizations make sure that their core portfolio is traceable and authentic, and therefore ready to plug into the blockchain if they deem it necessary. But going from 0 to 1 is important before we make that leap.
And another technology question is you using satellite imaging right now? Any other kind of tooling that you're going to use in the future, you plan to use? Drone technology has been around for quite some time. Any other things you're thinking of introducing into your business model?
Definitely. So making Cropin integration friendly has been one of the key philosophies while making the product and getting the architecture ready. We see ourselves as a fully integrated platform where the partners that we work with can input several data sources. So at the moment, Cropin will look at weather data as well as remote sensing. However, the platform has the capability to absorb on-farm data that can come from drone technology, that can come from sensors as well, to be able to make much more granular decisions. So that's really in the pedagogy of the platform.
Okay, now back to kind of the microfinancing part of it. As a farmer, as a lender to the farmer, kind of early warning systems. Obviously, I'm curious to find out how the performance is doing from the crop being growing to get money back in the end of the day. Obviously, there's no hedging per se, you can hedge against failure of the crop at that level at least. What are the early warning systems that you provide in that kind of monitoring part of it that the bank's going to utilize to step in or to provide all services to the farmer if needs be?
Sure. So once the crop is planted, we can actually use the remote sensing of the satellite data to actually look at the stages of the crop, which means that we can provide early information about whether the crop is at the right stage within the season. We can provide information on the canopy cover and the health of the crop, so we can provide an early warning sign of a possible decline for the crop. A little more technical, but one of the indicators that we look at is soil moisture, as opposed to just optical data. When we look at optical data, when the plants are decaying, is really when we can tell that there's a risk of crop failure. However, with soil moisture, it's an early warning sign to advise whether this particular farmer and this particular plot, whether it's fundamentally ready to have a good season. So soil moisture is a very early warning sign as well to be able to determine the extent of crop failure that might happen.
I think it's a great tool for the bank specifically to lend money to kind of smallholder farms, because the crucial aspect always is from a bank's perspective, what's the credit worthiness of the smallholder farm, and also what is a earlier knowing customer, KYC, is the person you're lending to really the person you lend to or not. That gives you a way of advice. KYC, is that going to be part of your business model going forward as well? Can you extend it, knowing the digital information that you have? Is the KYC part of the model?
Yes, definitely. So when we actually look at farmer profiling, which is the beginning of the process for digitization, there are several features within the technology that can help authenticate the farmer's identity. So we have SMS-based response modules. We are looking at land record integration as well to confirm the legality and the ownership of the land for the grower, which of course is very important. metric for traceability, providing the live price loan product. And these are all elements that eventually go into KYC. So that's in fact the starting point of the process.
I think that answers up my session. Thanks very much.
All right. I think they did well to match us because the AgTech FinTech link at the moment is a very important question that a lot of people are trying to answer. Not everybody is successful at it. So thank you for that interesting presentation. One of the most important things you said was, and I believe everybody by now can resonate, that one size fits all is an approach that hasn't worked. It has to be tailor-made, it has to be context specific. So can you give us some specific examples of how Maha has adapted the product to smallholder farmers in Myanmar? What are the specific things that you guys looked at to incorporate into the product and how it's different from the other services out there?
Great, thank you. So, Myanmar is a huge country, 52 million people, various states at the bordering with Bangladesh, with Thailand, with China. And then there's a central corridor called Bamar, where you have regions. Maha is present in 8 of those regions and states. Hence, if you are a farmer, and you even cultivate paddy in the north of the country, and you are a farmer cultivating paddy in the south of the country, the starting season up north is different than the starting season down north. Cultivation, planting season that you need to really nail down in the north is probably a few weeks, if not months, earlier or after someone else living in the south. Unless you adapt your seasonal landing calendar to those specific timing needs of the customers. Let's say I approach you in Shan's Day in March. You might not need my cash crop loan in March. You might need it in early January, and my window is only of 2 to 4 weeks to nail it down. Otherwise, I might be out of business with that particular customer. Now, the other extreme is traditional microfinance, pretty much for urban, rural, small shops, micro SMEs. You instead, and those shops, those grocery, sari shops, they tend to have business pretty much throughout the year, except the key festivals, holidays, and festivities. Hence, they might need money for their stocks on a regular basis. The farmer, his needs, her needs are quite specific. Unless you really nail it down, you can't really help that farmer cultivate whatever he needs and have a good yield at the end of the 6 months. Just to another point, our cash crop loans are pretty much have a duration of 6 months. Our average loan ticket size is less than $1,000, $800 to $1,000. And those usually, this amount serves to cover their input cultivation needs. It's fascinating to observe that in a country like Myanmar, with 189 microfinance institutions, over 24 commercial banks, only 2 players are really looking seriously at the segment of smallholder farmers. And we have a long way to go, as I discussed earlier in my presentation, in terms of operation.
And apart from getting the product market fit right, in our experience at least, one of the intangibles is really trust. There's a lot of mistrust at the moment between farmers and large organizations. They've been burnt for many years by products that are bad or overpromised. So how does Maha as a brand actually foster that customer trust?
Great question. We are lucky because in Myanmar, we are owned by the largest agri-input group in the country, Myanmar OBA Group. And OBA is recognized as a leading brand because they've been around for 25 years. Started as a family business from our chairman, Uta Dohain, has been involved in 3 segments: seeds, agrochemicals, and fertilizers. OBA is recognized for quality products. And if farmers want quality seed, agro, or fertilizer product, they go to OBA. and their service has been tremendously great. Hence, the reputation of OBA in the country is fantastic. When our chairman, Uta Dohain, 6-7 years ago, was traveling around the country, he noticed that a lot of these farmers were requesting access to affordable credit. And that's when he decided to set up MAHA, although I came into the picture a bit later, in order to really answer customers and farmers' demand of, can you give us affordable, steady access to finance in order to buy and cover the cultivated input costs that we have to face over the next few months and years. We, although we are a 6-year-old company, the fact that we are associated with OBA does not pose a reputational or trust issues for MAHA. Farmers do recognize OBA and MAHA as the leading players in the country, hence we are not really suffering or being exposed to any of them. But if there is a concern of mine right now, it is how do we find an optimal balance between technology, fintech, digital innovations, and without losing the pulse of our farmers. And this is something that I might not have an answer today. As you said earlier, we are discussing with our senior management team, with our board, with our colleagues on a regular basis. I guess the tricky part for us in the years to come, besides the usual, funding, outreach, sustainability, is finding this optimal balance. Because I personally would like to introduce more technology, more AI, more data-driven processes. But let's not forget that we're not in Singapore. We are working in rural emerging markets of Myanmar. So I guess things might take a certain degree of time.
Good. What are some of the mistakes that MAHA Group made? Not to throw you under the bus, but
you are.
Well, I mean, as a startup, we made some very costly mistakes and had to learn. And
please tell us more about it.
So, what are some of the mistakes really that pinched MAHA in its journey, and what were the learnings from there?
When I came in June 2017, some of the key issues that it took me a few months to figure it out. As a financial institution, you really need to have strong foundations, like in any other businesses, but you really need to have strong corporate governance to start with, people, right set of people and skills. You need to have the right set of systems and processes. And I think MAHA, from 2013 to 2017, was not as strong as it is today on those 3 main pillars. So what I have practically done together with our chairman and my colleagues is, number one, we have set up a very strong corporate governance framework, which was missing before. A board of directors. We have now 2 board committees, the Audit and Risk Committee, the HR Committee. Here on the first row is Mr. Raymond Lam, who is our ERC chairman and independent board member, so please feel free to talk to him. We have Juan, our IT advisor, and we have our ALCO chairman in the audience, Mr. Check, so feel free to talk to them later. We changed core banking systems. We really review all the policies, all the credit risk policies, the lending policies, the HR policies. And we noticed that there was not a meritocratic, performance-driven culture. There was no passion. And the strategy was also unclear. So we really had to draw a line and say, what do we want to achieve in the next 5 years? Let's draft a business plan, let's draft a strategic plan, let's bring international professionals, but by keeping a very open, fun working culture, because MAHA, it's a safe place to make mistakes, especially if the mistakes are not really affecting the bottom line. But the team is really young. I manage a team of over 200 people, and we're only 3 foreigners. The Italian guy and 2 Indians. Everybody else is Burmese, but we're always looking out for talent, especially from ASEAN countries. We're always looking for new talent to inject, because I believe the best strategy is not to have MAHA full of expensive foreigners, but to have a good balance between local talent and international foreign talent. Other mistake that I think we did, or my predecessors did, was to really to not understanding how important financial sustainability and operational sustainability is for a microfinance company. When I approach lenders, banks, international, you know what they ask me? What's your profitability track record? First question. How big is your asset size? What is your NPL? What are your NPLs? What is your portfolio risk? How strong is your corporate governance? On all those areas, our answers were very weak back then. But today, we have a line, we have a queue of lenders interested in financial inclusion, sustainability, rural finance in Myanmar, willing to invest money in MAPA because they find a solid, much more solid shop.
Yeah, definitely. I think in a sector of this nature, creating the culture of failing fast and recovering quickly is critical. My last question for you is you made comments on reducing the turnaround time and bringing it down almost to 72 hours, and this is critical for the grower because they don't have the luxury to wait. They just don't have the staying power for something like that. What have you done specifically to reduce this turnaround time?
Great question. And when we analyze the process of a loan application from a customer XYZ to one of our loan officers or branch officers, we realize that process of KYC, loan application, customer registration, was full of other questions regarding impact, social responsibility, what the CEO wanted to track. Questions that were not in any way associated with KYC and creditworthiness. So we said, okay, let's really take a closer look at all these tabs. We have a digital app, we have a digital tablet app that our fieldwork officers use. And there were a lot of redundant points for that specific task. Those were good questions, but not to be asked at that stage. To calculate or to verify the creditworthiness of a customer, you don't need to ask questions on the household, for example, social composition of your household, or whether your kids go to school. You really need to ask your ability to repay type of questions. Your expenses are important, your income, your sources of income, how much land you have. Do you have a secondary, a tertiary source of income, livestock? Do you have life insurance, group life insurance? Of course, there is no crop insurance yet. So we realized that we were really asking unnecessary questions in a very straightforward process. So we really, when I said MAHA wants to start behaving and acting and thinking more like a fintech, I really mean it. We really need to get off of this microfinance banking suits and become more fintech in the approach without losing the pulse of the farm.
Yeah, I think one of the important things that really strikes out here is the importance of being able to decouple the data that's important versus the data that's just interesting. The need for digitization and the adoption of it has distracted a lot of organizations, but really being able to discipline themselves to only collect the relevant data points such that they can optimize it to the fullest is I think a great way to end this Q&A. So thank you.
Thank you guys for it. Yes. Hey, it's great having you. We just met outside, so Faye and I are not friends. We don't know each other, we're strangers. But we're going to be friends from today, right? Officially. Can I add you on LinkedIn?
Yes.
Okay.
But not Facebook.
By the way, feel free to add me on Facebook. Same here, please. Thank you. Let's keep this professional balance. Jokes aside, Faye, you might have seen based on my presentation, I really am into people's stories, people's paths. Would love to know what's your personal story? How did you get into Mars? What's your background? How did you reach where you are? Because personally, I'm always fascinated by sustainability topics. You touch upon your presentation, and we would love to hear your story.
Sure, thank you. So I've been with Mars 22 years, and I've always been in supply development and supply chain developments. And like I said, we buy a lot of raw materials from my smallholder farmers. And I think what struck me as I started to understand all these different supply chains is this deep economic inequality that exists in the world today, and particularly at the smallholder level. And so that's really what got me interested. I'm also a Baha'i, I'm an adherent of Baha'i faith, and in that we actually believe that the purpose of humanity here is to serve mankind. And where I think that intersection of how it came together was this purpose. And because I work for a purpose-filled organization, I was able to live my own personal purpose through the work that I do. And you know, the Japanese have this word that says if you're passionate about it, and that it also pays you, it gives you your salary, but at the same time, you are able to get so much fulfillment out of it. That's like the best job in the world. So I'm truly grateful and humbled because really working with smallholder farmers, you really get a different perspective of of the world, of what it is today, but also what it could be tomorrow. Because in their poverty, they are so happy. I mean, they are simple happiness and the way they approach life. So I think there are many things we can learn from each other.
Absolutely, and well said, especially the part about simple happiness, the part about having the best job of the world. It seems like you have one of the best jobs in the world.
Maybe you as well, so that's why we should be friends.
The other question is, obviously I'm not working for a big multinational like yourself. It's a family business, Mars is a global, well-known brand. I'm sure some of us, we buy your chocolate products, don't we? Especially I do.
I hope so.
But tell us more about Mars in terms of vision. What does Mars do? Why was Mars set up? In what markets do you operate? And a bit more about Indonesia before.
Right, so Mars is owned by the Mars family. We're still family owned. And whilst they don't actually get involved in the day-to-day running of the business, they run the family, the board, we call it. And they've got 4 things that they expect from the business. One is, of course, financial performance. The second is what we call trusting relationships. So they want to develop trust with not just consumers and customers, but government and farmers and all the people that they touch in the business. The third is what we call quality growth. So growth, coming from delivering quality products and implementation. And the final and the fourth, which is the most important one for me, is the community-based approach that we depend on so many millions of farmers around the world, and that if they don't thrive, we don't as well. So that's a little bit about the family. They come, some of the family, like I'm just hosting one in 2 weeks' time, Frank, who is going to come, and he spends 2 to 3 weeks with us on buses, into farms, out of farms, talking about new innovation that we need to think about. So this isn't something that we do and say because it's sexy. This is something because it's integral to who we are, and that our future depends on a thriving cocoa community. So we see that huge in Think, and maybe so Mars, did I answer Mars? I answered.
You answered 2, what markets do you operate?
Okay.
Tell us more about Indonesia.
Literally all the markets in the world has Mars products. But we don't manufacture in all of the markets, but we have manufacturing sites all over the world. I think we have I can't remember how many, hundreds and hundreds of factories around the world. In Indonesia, so what can I say about Indonesia? Indonesia for me is very exciting because they could literally be the producer of food for the world, right? I mean, they've got land, they've got sea, they've got water, they've got people, they've got every opportunity that we can think of, yeah. And they are very entrepreneurial, and there is so much social cohesion in that community. Despite its differences, you see a lot of peace, and you see a lot of trust, and you see that people actually can work together, which is for us a very starting position of why we would invest in the communities, because there's a really strong social capital to begin with. So I think it's an amazing country.
Talking about this amazing country that I'm sure most of us has traveled to, has worked in, can you tell us more about what challenges right now in Indonesia specifically do you see in your day-to-day business? Are those people challenges, regulation challenges, infrastructure, lending and finance? Give us a bit of a 360 degrees overview on the most critical challenges that, based on your experience and work, you observe on a regular basis, please.
I will talk particularly as it relates to smallholders. Okay, the needs of a smallholder is they need access to affordable and available inputs and the right quality ones. They need a plan that helps them get there, and I mentioned all of that in the past. But I think a big bottleneck that we're facing is the lack of banks wanting to actually lend smallholders, particularly in the tree crop, where there is this long gestation period and there's the risk of side selling, that the beans could go somewhere else and you don't actually get the repayment. But the reality is there are many opportunities as well. Companies and a lot of our supply chain partners are working hand in hand and very closely with these farmers directly. So there's already, and we do it because we absolutely need the loyalty and the beans, right? So adoption and loyalty goes hand in hand, and as to why we would want to work with these farmers. So to be able to trust that we have this relationship and then look at how we can create a product that is able to look at risk sharing, and I'm big on this. I went to a long bank in Utrecht, right? I think that we had, and we were just having a discussion about this, and we said the holy grail of smallholder financing is in actually tree crop replanting, and that will solve palm, coffee, cocoa, rubber, a lot of this tree crop. But unless and until all the parties can come to the table and acknowledge the risks and define a product that we can then have a risk share mechanism that taps into our access to these farmers and the work that the direct touch point we've got with them, that taps into the community assets, taps into some of the risk sharing mechanisms that could have come in. So we are very excited because 2-3 weeks ago, we've just finalized with IFC a loan crop insurance product that looks at satellite-based SMI that is able to look at if in these months, the soil moisture index goes above or below, so it's too much water or too little, that impacts yields, then they will pay on basis of just the SMI. They don't need to go in and verify that indeed, because we've done such a good correlation between the yields and the SMI that we looked at. So I think it's looking at all these various risk mitigation strategies that we should bundle together. But at the end of the day, like I said, it's about the human and the touch point that we have with farmers to get them to a path to prosperity. It needs to really, it's a long process that will need that accompaniment throughout.
Thank you, very brilliant. I'm actually very ignorant about those topics in Indonesia since I'm based full-time in Myanmar. But currently, Indonesian cocoa farmers, where do they get financing from? How challenging is their share of getting financing?
Okay, so most of the trees, I know this across the board, like in palm and everything as well, has come to the end of its life cycle. So typically the trees are about 30 years old, 20, 30. So actually it's not just, if we can crack the cocoa, sort of holy grail, we can crack quite a number of other holy grails as well. And because we're at the end of that life cycle, coconut, that's 60, 70 years old in the Philippines. So, the point here is, and to replant, obviously, takes years, and there's a dip, and so we don't tell farmers to plant everything, replant at the same time. Let's do 15 to 20%, and then let's rehabilitate the soil there, get that going, and then you double your income there. Let's put in some temporary crops here whilst you're replanting. So it's quite a very, every farm is different, and so they need that farm development plan.
Every farmer is unique.
Every farm is unique, and every farm is different. And but I think once we are able to crack this replanting formula, then I think it's a huge, But where there's also many family, middlemen, we call them gola, in Indonesia, which are middlemen that lends at really high interest rates. So we need to bring the banks in at 7% interest rate.
Terima kasih, Faye. Please join me in a big round of applause.
Thank you so much. In the interest of time and knowing full well that we have some drinks and stuff, and networking is such an important part of these series, what we've made an executive decision, what we're going to do is we're going to skip the brainstorming, and we're actually going to go into Paul's wrap up, because I think what he's got to say is really, really important. Like we said at the start, there's so many learnings that come out of the digital learning series, and I think we should spend some time with this group here just to reflect on those And even we can throw it open up, I'm guessing, to a Q&A. Sure. If there's any other questions, you can hit on board. So let's, for this session, we'll skip that and we'll go straight to the presentation.
Thank you. So not all of you will have been to all of the events this year, so I wanted to start with a bit of a wrap-up of what we've had a chance to look at this year in the digital learning series. So we started off with a great view of the landscape in ASEAN of digital technologies. And there's a lot of exciting things happening, and there's a lot of overlap between technologies. And then in the second event, we looked at drones, and this is a trend that I think we're going to see over the next 10 years in smallholder agriculture in ASEAN is very reduced availability of labour, and that's something that we see when we talk to farmers, when our partners talk to farmers, is the lack of labour availability in rural ASEAN. And I think where we can mechanise spraying, where we can mechanise the application of fertiliser and land preparation, I think we'll see a lot of technologies emerging that deal with the labour shortage. The Netherlands Space Office partnered with us on the third event, and we looked at satellite data, and we actually had over 10 different satellite providers from across the region talking about the value of satellite. And you've seen it again today with CropIn. When you need to locate a person on each individual farm to provide a service, business models start to really suffer. The ability to do things remotely, the effective use of satellite information is such an important, and it was great to have CropIn today talking about that. We then jump to that scale and stickiness, and this is again and again the challenge for so many agri-tech operations is, I've got a great service, farmers are liking it, but how do I scale up? How do I get my acquisition costs down so I can get more farmers on board, and how do I get them to stick with my solution? They are a very fickle, very conservative customer base, and we had some great insights from the largest mobile wallet provider who's brought on over 1 million customers in 12 months about how they do it in the mainstream tech industry. We then jump to corporate startup partnerships, and again, this is just such an important issue in agri-tech. Startups are so necessary for bringing innovation and taking products through the minimum viable product stage, but agribusiness is so important for taking those ideas to scale. And those partnerships, that methodology is so critical because if corporates don't know how to work with startups, then they're cutting themselves off to innovation. And if startups don't know how to work with corporates, they're cutting off a pathway to scale. And they're not easy partnerships. And we had a great presentation from Unilever about how to do it. And then finally, thank you very much for those that presented today on a really important topic of finance. It was great to have the 3 partners that we see as most critical to unlocking finance. We need agribusiness in the room. We need technology providers like CropIn, and we need lending agencies like Maha that are prepared to get out there and lend to farmers. So it was a great presentation to have those perspectives, but that's really the partnerships that we see as driving access to finance. As I stood back at the end of the series and kind of thought about everything that we've learned and everything that we've covered, I tried to think what is important, what is the most important takeaway from the series. And for me, it's business model. So we can talk technology, we can talk about satellite, we can talk about lending, we can talk about credit scoring, we can talk about all the exciting things that are out there. But unless we can wrap ag tech up in a business model, and the business model is basically, can I acquire customers more cheaply than their lifetime value? So can I create an ag tech product where the lifetime value of that customer is lower than their acquisition cost? That's when ag tech works. We can have all the technology in the world, all the great ideas, all the wonderful founders with all the enthusiasm in the world, all the corporate executives who are trying to digitize their businesses. But unless it's couched in a workable business model, we can run pilots, we can run trials, we can run CSR projects, but we can't get it to scale. So we've been doing a little bit of thinking at GrowAsia and some writing. We've been thinking, where are the agribusiness business models? And we've looked at the farmer, we've broken it down to 5 that we see as prospective. Farmer advisory business model, which is basically design those farmers and sell them to a whole bunch of data consumers. So I will provide free advice to a farmer, because I can sell information on that farmer to a bank, I can sell it to an insurance company, I can sell it to a crop protection company, I can sell it to a fertilizer company. This is an emerging model that will grow, and one of the ones that we are certainly interested to see. The subscription-based model for advisory is not working. Okay? So it's the advisory services that are able to monetize the data out of their service that are really able to go somewhere. We are seeing a lot of activity in peer-to-peer lending, particularly out of India, but also in this region. Farmers do pay prohibitively high interest rates, often 50 to 60% per year, and any digital lending service that's able to connect them with lenders is probably one of the most profitable and fastest growing agri-tech solutions in ASEAN. Then there's the whole hardware space, where you're actually selling kit, whether it's a drone, whether it's a smart irrigation service, to a farmer to extract higher yields. So your customer is your farmer, and your value proposition is increased yields. Then you've got the whole traceability set around what Faye was talking around, that level of trust with customers and understanding value chain. And then finally, perhaps a little bit more in the future, but you've got the whole potential to actually use e-commerce for buying and selling products. So it was just a thought exercise that we went through to really think, what are the business models and how would they actually work and how would they scale? And we think this is a really important question. And we have started to do some thinking about, okay, what is the lifetime value of a customer in these different business models? And you can see at the high end there, it's those hardware type models, it's the models where you're lending to the farmer, where you can really make good $10, $20, $30 value from a transaction with a farmer, lifetime value in hundreds, if not thousands of dollars. At the other end, the traceability end, in the advisory end, you're talking about lifetime values in the sort of $10, $5 to $10. So completely different lifetime values, really important driver. Then you've got acquisition. And as I said right at the start, the business model is about the difference between the lifetime value and the cost of acquisition. The magic happens when your cost of acquisition is lower than your lifetime value. And that's what we're looking for in agri-tech. And then we're starting to also think about what are some of the other constraints. So smartphone dependence. How smartphone dependent are these different models? And it's just a way of having a discussion, opening the debate with the community about where the most promising models are. And then finally, we're starting to do a little bit of analysis on the competitive pressures on these models, using Porter's approach to competitive analysis. So where are the threat of substitutes to these business models? What sort of power does the buyer have? What sort of power do suppliers have in these business models? It's not about us coming to you and saying, here's the answer, here's the business models. It's about us engaging with the conversation with all of you about where the most prospective agri-tech solutions are and trying to put a framework of business model and competitive forces around these models so we can understand them better. And as corporate leaders, as VC, as founders, we can start to make more sensible decisions about agri-tech. I just wanted to give you a little bit of an overview of where we've been over the last year with the learning series. Over 4,000 people have visited the Grow Asia series website. I encourage you to go there. All the videos from the previous events are there, the logs from the previous events. We've been releasing a whole series of videos off the back of these events, including the insights. Over 25,000 people have viewed those videos. Over 300 people have attended in person, more than 300 by live stream, and guests from all over the world from leading agri-tech solutions. And I'm sorry if you don't see the logo of your organisation up there, but we're just trying to get an indication of the audience and the speakers that have been part of the series this year. It's been an absolute pleasure, and I hope that you found it useful, not just from a learning point of view, but also just networking and meeting with one another. And finally, I wanted to thank the two organisations that have helped us bring the series together, Faye & Co as well as Beanstalk, and Rob, great job today, thank you, on today's event, and the two donors that have made this possible, the Australian Government and the Inclusive Business Action Network. So thank you all very much for coming today, and if you came to previous events, thank you. And please do jump into this business model review. You can see the site there, it's at growasia.org, and you can find your way through to the business model guides. For each business model, we're having an investor, typically a VC, write their perspective on the business model. We're having one of the founders who's used that business model write their perspective, and then GrowAsia's making their own contribution. So quite a well-rounded perspective on that business model and an assessment of how perspective it is. I'll leave it there. Thank you very much. Drinks will be available shortly, and thank you for coming.
People,